PE ratio? PB ratio? What is that? So when it comes to investing in individual stocks, people are always telling us to buy stocks when they are undervalued. In this video, I'm going to go through what undervalued stocks are, why people buy undervalued stocks, and how you can also find undervalued stocks really easily. And I'll also take you through all of the metrics which are important to me and the things that I consider before I do buy individual stocks. So if that sounds like something that you're interested in, make sure you keep watching. But first, what does undervalued mean? And why do we want to buy stocks when they are undervalued? So when a stock is undervalued, it is available in the stock market for a price which is below its fair value. And buying businesses when they are undervalued is actually key to one of the best investors in the world. And buying stocks or businesses when they are undervalued is really important because sometimes we can buy really awesome, great, high quality businesses, but at the wrong price. And by the way, before we get further into this video, I did want to mention that I'm not a financial advisor and this is not financial advice. So if you do need professional help, do make sure that you do reach out to a professional financial advisor for help with your investing. So before I actually look into whether a stock is undervalued or not, there are also some other metrics that I do look at in the businesses that I do invest in. And these things are really understanding the business for one. So I think that all of us are quite different and we all have something that is a bit of an unfair advantage compared to the average person. Perhaps you have more experience in a certain industry that not a lot of people know about. You can actually use this to your advantage in your investing. And that is one of the reasons why I do like to buy businesses which I personally understand. Another thing that I do look at when it comes to businesses is I also look at the return on invested capital for the past 5 to 10 years. And return on invested capital is basically a bit of a guide which can show you how effectively the management team is using the capital from their investments in order to grow the business. So I really like investing in businesses which have this number above 10% and even more than that for the past 5 to 10 years. Another metric which is really important to me is free cash flow. So free cash flow is basically the amount of disposable income a company has to make investments. And I think that this is really important because it does mean that if a business has a lot of free cash flow, they do have a little bit of a fire extinguisher. Just in case something happens to the company, they can easily put out any fires that do come across their path. I also do like to look at businesses which have their revenue increasing year on year for the past 5 to 10 years because I think it is important to buy businesses which are growing in the future because essentially when we do invest in businesses, we want our investments to grow with time as well. And if you are enjoying this video so far, make sure you give this video a like so that you can change this video to being undervalued to being fairly valued. And finally, the last thing that I do look at a business before I invest in it is I really want to consider whether this particular business is going to grow and thrive in the future. And for these things, I also do like to look at the nature of the industry that this business is in. I also do like to look at competitors to this particular business and any threats that this business might have in the future. Because if there is a competitor which is perhaps growing even faster than the business that I'm thinking of investing in, I should definitely be looking at those factors and I should be comparing the different competitors to see which one might be the winner in the future. So let's get into the juicy part of this video, and that is how can you actually find out if a stock is undervalued. So the first thing that you need to look at, and it is probably the most obvious thing is the PE ratio. So PE ratio means the price to earnings ratio of a business. So a stock which is deemed to be undervalued generally has a PE ratio of below 25, and a stock which is overvalued generally has a PE ratio which is above 25. But of course, this really does depend on the industry that your business or stock is in. So if the stock or the business that you're looking into is in the technology sector, technology stocks generally do tend to have a higher PE ratio than other industries. And it also does depend on how popular this stock is to buy. So generally, some of the most popular stocks in the world do tend to have a higher PE ratio. For example, the stock Apple, because a lot of people do believe in this business long term. They are happy to pay a bit of a premium for owning that stock in their portfolio. So how can you actually find out what the PE ratio of a company is? So you can calculate the PE ratio of a company by taking the price of a company, which is the market price of a company or a share, and dividing that by the earnings per share. Or you can actually have a look at some other websites which can help you calculate this number. So the one that I personally like to use is Yahoo Finance, and I can actually see the current PE ratio of Apple, which at the time of recording this video is 38.76. Another website which I do like to use when I am looking at individual stocks is called Simply Wall Street. So as you can see here on Simply Wall Street, I'm having a look at Apple stock, and if I go into the number 3 point where valuation is, it does show me the current PE ratio of Apple. And finally, another website which I do like to look at is called Morningstar, and they also do have reports built on stocks and companies. So I can access these reports through my CMC Markets account. So if I have a look at Apple, they've got this Morningstar report, and this can also show me the financials and the PE ratios of Apple. So I do like to have a look at these different websites, as well as calculating it all by myself, because I think it is hard to get a very precise number, and that's the reason why I do like to have a look at multiple different sources. So another thing which I do like to look at is the P to B ratio, or the price to book ratio. And this compares the company's price against the company's book value. And a stock is considered undervalued when the price to book ratio is under 1. So another metric which I do like to look at to determine whether a stock is undervalued is the price to earnings growth ratio, or the PEG ratio. And this can tell us the potential growth of a company compared with its current PE ratio. So a good price to earnings growth ratio is around 1 or under. So those are the 3 main metrics that I use to determine whether a stock is undervalued or not. And some other metrics that you can look at to determine whether your stock is undervalued also includes the dividend yield, the return on equity, and the earnings yield. So now we know a bit more about the different metrics that you can use to determine whether your stock is undervalued. Let's get into how you can actually find undervalued stocks. So to actually find undervalued stocks, you can use stock screeners, and the ones that I personally like are the Yahoo Finance Stock Screener and also the TradingView Stock Screener. And by using these 2 different websites, you can actually put in the PE ratio, the price to earnings growth ratio, or any other metrics that you find helpful when determining undervalued stocks. And these websites can actually bring you up a list of stocks that are currently undervalued when you do compare it to their price to earnings ratio, their dividend yield, or any metrics that you do put into the stock screener. And by the way, if you would like to get into individual stock investing, I've got a link in my description below to Stake, which is a platform that you can use from Australia to invest in the US stock market. This is the platform which I personally use, and if you use my link in the description below, you'll get a free stock if you do deposit some money within the first 24 hours. And if you are in the US or internationally, I've got a link in my description below to Webull. So if you do deposit some money into your Webull account, you will also get 4 free stocks. So make sure you check out the links in my description below to take advantage of those offers. Undervalued stocks are undervalued for a reason. So I think it is very, very important before you invest in any undervalued stock that you do your due diligence, have a look at the news surrounding the company, and actually have a look at the reason why the stock is undervalued in the first place. So then you can make a bit of a judgment call as to whether you think that that undervalued price is justified or not. So I think that when we are investing in individual stocks and individual companies, it is a little bit of an art, and it is also a bit of a science as well. So the art of investing in individual stocks is actually having a look at all of those fluffy metrics. For example, is the company going to grow in the future? Is this a really solid company? Do they have a strong management team? All of these things can be really difficult to determine with just numbers alone. I mean, just look at the example of Tesla. If you have a look at the financials of Tesla, if you have a look at the PE ratio and all of these metrics, Tesla does look very, very overvalued. But when you look at all the fluffy kind of metrics which surrounds Tesla, including the vision of the company, the technology that they're hoping to build, then you might be able to see Tesla as an undervalued stock if they are able to deliver on all of their promises for the future. And that is the reason why I think it is very important to have a look at both the art of investing in individual stocks, but also the science as well. So there you have it. That's how you can find undervalued stocks to add to your portfolio. I hope you enjoyed this video and found it useful. If you did like this video, make sure you give this video a like, and I've also got some links in my description below to Webull and Stake. And I've also got a community on Discord, so if you're interested, definitely check that one out as well. Thank you so much for watching this video. I'll see you in the next video. Bye! And I've got some links to some videos here, and this link in particular is a video that I've done on how I research individual stocks before I invest in them, so make sure you click the link over there.